The banking landscape has changed since earlier this year in 2023. It's changed significantly. It is paramount right now to understand where to go to get access to your capital, what banks you need to be building relationships to scale up access to capital to grow your business and to grow your personal finances. The banking system has changed dramatically. It hasn't gotten as much press lately because so much other craziness has been happening, but every institution is not okay right now. Every bank, every lender is not okay right now. And I want to give you a quick breakdown, but a detailed breakdown on where you need to be going and where you might need to avoid as far as scaling out your banking relationships to get access to capital. I'm going to cut to the chase. I would say regional mid-sized banks and some small community banks are in trouble. A good bit of them are in trouble. The higher interest rates have been a real problem for them. And another thing that's beneath that doesn't get a ton of coverage either is a lot of these banks are the guts of commercial lending for commercial real estate. Higher interest rates in commercial real estate have been damaging as hell, detrimental as hell, because commercial real estate, unlike residential real estate, has fluid terms. It's not like 30-year fixed terms like mortgages, and people can ride out higher interest rates for short periods of time. Commercial real estate, 3 years, 7 years, 10 years, and that debt's turning over. The interest rate is renewing. It's adjustable. So that basically means a ton of real estate that was at dirt cheap levels and profiting at those dirt cheap levels 2, 3, 4, 5, 6, 7 years ago when they locked in that debt is now dealing with double the interest rates in some cases. So commercial real estate is in very serious trouble on top of massive vacancy rates because commercial, the work from home movement and things of that nature have affected office space and other industries that have slowed down since COVID that haven't come back. You have increased debt costs and lower revenue in commercial real estate. This is squeezing the hell out of mid-size, community size, mid-size and regional banks that are the guts of commercial real estate. And it's doing terrible numbers on their ability to lend out any more capital. They're in trouble. And I'm not saying all of these banks are going to collapse, but they are going to probably be a hell of a lot harder to get money from. And especially on any real scale. You might be all right getting credit cards at okay limits, small debt, maybe like 10, 15, 20,000 for some small business stuff. But if you're talking about getting, mid to upper 5 figures in borrowing capacity from these institutions, it's going to be a struggle. Where do you go? Well, I can tell you right now, one area you're going to go is big banks, top 5, top 10 banks. Chases, including Amex. They may not be in that top bracket or not, but I'm going to definitely throw Amex in the mix. Your Chase banks, your Bank of Americas, Goldman Sachs is probably pretty good. Some of these larger institutions and these super regionals, like the Citizens, UBSs, and stuff like that. They're in a mixed spot. The super regionals, but they're probably going to be okay. Your big 5 or so are going to be solid. They're looking to gulp up market share. And I'm actually going to shoot another video relatively soon about one of these banks that's really going in about this opportunity. These big banks are going to be in good shape because they are not as exposed to the commercial real estate issues. They have more diverse portfolios of, clientele base and assets on their books. And they're better positioned for these higher interest rates that probably are going to be pretty temporary. So big banks are going to be a good place for you to go and build your relationships and expand your capital, your access to capital. The next arena is going to be credit unions. And I'm going to tell you why. Most credit unions, if not all of them, should be in pretty good shape. They're not for profit. Their business model is not quite the same. Yes, they make money in similar ways that for-profit banks make money, but they're non-profit. So they are not in a situation where they're beholden to any kind of shareholders and things of that nature. That allows them to focus on their members. The money they make and the way they do business is centered around you as the member owner of that credit union. They are going to be able to continue to focus on you. Navy Federal will continue to be great. PenFed, First Tech, On down the line, will continue. Your local credit union in your zip code that's only in that community will likely be stable because they are not for profit. They also have the backing of the government. Credit unions are literally nonprofit entities and will have support from the government that personal and private entities will not quite have. So credit unions, large or small, and big banks, top 5 banks, and some of those super regionals are gonna be where you want to focus the next couple of years or so. The banking crisis is not undone, it's not finished, and the commercial real estate squeeze is not finished. These mid-size, smaller regionals, community banks that have been the guts of commercial real estate, that have overexposure in these areas, are in trouble. Some of them are gonna fix it, some of them are gonna get assistance, some of them are gonna get birds gobbled up, some of them are gonna collapse. You wanna be in the right place at the right time. If you're not the type to do the due diligence on these institutions and their financial health, then I recommend you just stick to big banks and credit unions. If you are, then you wanna be looking at the size of these institutions and dig into their financials and do your analysis to find out how exposed they are to commercial real estate. Hell, in some cases, these banks are small enough and tight-knit enough, you can walk in and actually talk to some important people in that institution, and they're going to talk to you about these things. Either way it goes, do your homework or stay the hell out of the way and get with the right institutions so you can get the access to the capital that you need to grow and scale. And the only way to do that, and like I said, do your analysis or stick to the big banks, stick to the credit unions. Comment down below. Let me know who you're doing your banking with. Are you exposed to some of these mid-sized and regional banks and don't really realize that they might be in trouble and your banking relationship and access to capital could be in trouble? Let me know if you're banking with some of these big banks or credit unions and who your favorites are and what benefits, what access to capital that you're experiencing with them. Other than that, to all my pioneers, welcome back. To my new viewers, welcome in. Want to learn more about myself and the channel? Start in the description section and work your way to the about section. Other than that, I want y'all to stay focused, stay in motion. I'll see y'all soon.
This is JP from Blueprint for Prosperity Network, a channel dedicated to helping you increase your net worth through relationship banking, maximizing your borrowing capacity, the proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity.